Hey there, and welcome back to the channel. In today's video, we're going to be going over the latest earnings report for Tencent, which is a Chinese social network and gaming company. We're going to start the video off by going over their financials, and then we're going to take a look at some of my highlights from the earnings call. I do have to warn you beforehand, I am probably a little bit biased towards the company, but I am an investor in Tencent and have been for the last couple of years. But before we start digging in, I do want to pay homage to a great man that passed away a couple of days ago. Charles Thomas Munger died at the age of 99 years and 11 months. Charlie was a great man that taught me a lot about investing and even more about how to live life properly. Rest in peace, Charlie. You will be sorely missed. And I also want to mention, if you get any value out of these videos, I do want to ask you to smash the like button and subscribe to the channel. Also, leave me a comment below if you have any comments on Tencent or about some other companies that I might be interested in making a video about. So let's start off with the financial highlights for Tencent, where we can see that their revenue went from 140 billion in the third quarter of 2022 up to 154 billion in the third quarter of 2023, which was a 10% increase year over year. If you look at how the revenue split, they report their revenue in three segments: the value-added services, online advertising, and the fintech and business services. The value-added services is then divided into social networks, domestic games, and international games. And we can see here that overall value-added services only grew by 4% year over year, while the social networks were stable at around 0%. Domestic games, which historically have been their bread and butter, only grew by 5%. And we can see a good increase in international games, which grew by 14%. Now, the online advertising is where I believe that the pricing power of Tencent comes into play, where they saw a 20% increase year over year, which is pretty impressive. Fintech and business services keep on delivering an impressive performance, where we saw the revenue grow by 16% year over year. But fintech and business services is the WeChat Pay, the cloud services, and also the company is getting into wealth management and the loan business. So gross profit is growing at a healthy 23% per year, but the operating profit and the net profit attributable to equity holders is growing at an even higher pace of 36% and 39% respectively. And the operating margin of the company keeps on improving, which shows us that the management team of Tencent is delivering on their promise to become a more efficient company. So this is a slide they always show to investors, which is really fun to track their progression over the years. But here we can see where they stand in games. And in China, they are number one by users and revenue. And globally, they are number one in the world by revenue. In their social network section, they have Vaccine and WeChat, which is the number one mobile community in China with monthly average users of 1.3 billion. Now, QQ is their old social network, which is not really growing a lot, but still providing decent revenue, where they have mobile devices, monthly average users at 558 million, which is still pretty impressive. Now, in the fintech space, they are competing against Alipay, but according to the company, they are number one in mobile payment by monthly active users and also by daily active users. In the cloud space, Tencent is still behind the market leader in China, which is Alibaba, but there is a good chance for the company to become number one, seeing that Alibaba has really been struggling to grow their cloud business. If you look at the utilities sector and the mobile browser, they are number one by monthly active users and number two in China in mobile security. And finally, Tencent is also number one in China when it comes to premium content. So this is an interesting slide provided by the management team, which shows us how the company is shifting their revenue towards a more high quality revenue growth model. And if we go back to the fiscal year of 2020, their revenue growth was really high at 28%, along with their gross profit and operating profit. We can then see everything slowing down to a crawl in 2021 and going to negative numbers in 2022. Now, the story has been completely different in 2023, where the growth in gross profit has been much faster than in revenue, and the growth in operating profit has been even faster than both the gross profit and the revenue growth. And this is a trend we are seeing with other large companies like Alibaba and Meta in the US. And in this slide, revenue by segment, we can see that the social network segment is becoming less and less important to the company. And the same thing can be said about their domestic games, which went from 25% of revenue down to 21%. Now, I do have to admit, when I first invested in the company, I thought that international games would be a bigger percentage of total revenue, but they've stayed pretty flat, going from 8% up to 9%. But the online advertising is where the biggest pricing power for Tencent is, in my opinion, and this is very likely to grow in importance for the company for the next couple of years. Finally, we have financial and business services, which has slowly become the most important revenue source for Tencent. And if you look at the gross margins for the company for the last 3 years, we can see that the trends are all going in the right direction, which adds up to what management is telling us about the shift in revenue and the company having a more high quality revenue with higher margins. And the biggest change can be seen in the fintech and business services, where gross margins went from 27% up to 40% in the latest quarter. Now, as we can see here, the same thing can be said about their operating margin, going from 30% up to 35%, and their net margin from 26% up to almost 30%. Now, their operating cash flow and free cash flow have both seen a robust growth year over year, with operating cash flow growing 59% and free cash flow growing 85%, and was 51 billion renminbi for the quarter, which is approximately 7 billion US dollars. The company has approximately 55 billion dollars of cash, and they owe less than that, so they are net cash positive, which is good to see. The company did buy back shares for approximately 2 billion US dollars, and they also have quite an impressive investment portfolio where their listed companies are worth about $65 billion dollars, and their unlisted companies are worth 48 billion. At the time of this recording, the market cap for the company is approximately 386 billion dollars, with 55 billion dollars of cash. They're generating around 7 billion in free cash for just one quarter, and they have an investment portfolio that's worth around 113 billion. The first highlight from the earnings call is from the president, Martin Lau, where he talks about the company being very focused on shareholder return, with them having a very strong cash flow alongside a very large investment portfolio, which we saw earlier. So the company does have the flexibility of using different tools to increase shareholder return. Now, the company does pay a dividend, and they have been distributing investee shares, and they've also been divesting some of their investments to give money back to shareholders. But I agree with this point from Martin that if you look at the market, the valuation for China is at a historical low. So he says here that at this point, the buybacks will be the best thing to do for shareholders than any other means that they have at their disposal. Now, it's always good to see when you agree with the top man at the company, and I hope to see Tencent be even more aggressive in buying back their stock. Now, here the management team is talking about the new shift into high quality revenue growth model, and the biggest driver for that is the growth of new high quality revenue stream and the scale back of certain low quality inactivities. And the second driver, which they view as less recurring, is that they optimize cost by exiting certain non-core businesses and cut back excessive spending on operation subsidies and market activities during the tough time. The third and last driver, which the company views as ongoing, is their focus on cost discipline. This is something that you would have thought you wouldn't have to teach big companies, but that is the lesson that all of these companies are facing now in a tougher macro environment. They have to be more disciplined with their costs and try to improve operational efficiency as much as they can. Here we have a question for James Mitchell, which is about the video account advertising revenue, which is a part of what I was talking about, them having a pricing power. Now he talks about the company having a four discrete growth drivers that they see supporting their advertising revenue growth. And the first of them is traffic, with the number of video views today being substantially greater than 50% higher than it was when they begin monetizing video accounts, which was just over a year ago. Secondly, there is the ad load. Today, the company is only operating an ad load on video accounts, which is less than 3%, and that is compared to the ad load with their domestic peers, which operate at over 10%. That number is probably higher in the US, so there is plenty of room for Tencent to grow their ad load on all of their platforms. And thirdly, there is the ability to uplift their click-through rates using AI, where today a typical click-through rate might be around 1%. Now, the fourth and the last factor is the closed loop opportunity. And they say here, if you look at their domestic peers in the short video space, they have been very focused and very effective at maximizing closed loop transactions because those generate the most information, and they enable the greatest future targeting and forward targeting abilities. And with all the platforms that the company has, their mini programs, WeCom landing pages, video accounts, and Tencent payment infrastructure, they are in an ideal position to ramp up on their closed loop capabilities. Now, I do want to end the video by quickly going over the key ratios for Tencent that I look at with my portfolio companies. Now, like we've seen in the numbers and the earnings call, the company is executing on their more high quality revenue and better margins, and we're seeing a free cash flow growth of 17% for the last year. Their 3-year free cash flow growth is pretty weak at only 1%, but their 5-year free cash flow growth is pretty decent at 10%. The company is cheap in my opinion, with the enterprise value to free cash being only 13, which tells us that they have a free cash flow yield of about 7%. The return on invested capital is rather weak for the company and is less than the 5-year medium, while their return on capital employed is strong at 20%, and the return on equity is even stronger at 25%. Although we have seen some margin improvements compared to last year, their gross margin is still lower than it was 5 years ago, and it is the same with their operating margin. Still, their free cash flow margin is pretty strong at 33% compared to the 5-year medium of 20%. And like we saw in the investor presentation, their balance sheet is pretty healthy, where they have less debt than cash and have 113 billion of investments. Overall, I would have to say that I'm pretty happy with the quarter for Tencent, and I do think they are on their way to becoming the powerhouse they were a couple of years ago. I do think that Tencent is trading below their intrinsic value, like many other Chinese companies, and I am happy to be a shareholder in the company for hopefully many more years. But that's it for the video today. I do want to thank you for watching and hope to catch you on the next one.